Good morning and welcome to ATI Pro Media. I'm not off to a good start because I forgot my microphone at home again. So if I'm not coming through loud and clear, I apologize. But 2 days away from that big Jan 10th report, it's still on the forefront of our minds, definitely. Other things I think we need to be looking at. We need to continue to monitor this dryness in Argentina. Brady's going to give us a quick update on the Mexican feeder cattle imports. Then also, let's look at a great article from Farm Doc today, just looking at the economic assistant, the payment rates. I think it's pretty safe bet that we can expect. Let's kind of break that down as always. We'll answer any questions you got. But with that, let's go ahead and get in. Let's try and maybe last time Brady we went a little long. Maybe we can make this one a little quick and hit the points and get out of here. But we'll see how it goes.
I like it. Okay. Well, if they want a cheat code, my favorite way to watch YouTube is that little gear in the corner. You can put it on time and a half speed, and we start talking like chipmunks. So if you're watching the rewatch, that's the best way to rewatch it. But
There you go.
regardless, let's go to your markets. Let's check in
Let's
where
do it.
with where they're at here today. March corn's down 2 1/4, 4.55 3/4. Beans down a penny and a quarter on March beans at 9.96, just below the $10 level. Oil's a little firmer, meal's a little weaker, down 3. Chicago wheat's down 5 3/4 at 5.36 3/4. KC wheat, March KC wheat down 6 cents, 5.49 3/4 below that 5.50 level on March KC wheat. Over in feeder cattle are actually green on the board, green on the screen after that Mexican feeder cattle import headline that everybody was saying was going to be bearish and break your markets. We got some green on the board on the feeder cattle side of things. Live cattle up as well. Lean hogs mixed. Crude oil is up 22 points. Diesel's flat. Nat gas up 15. Over on your equities, the stock market, the Dow's down 150, the S&P down 7, and the Nasdaq up 8 1/4. Let's break down some headlines, Connor B.
Let's do it. I think the first thing is we need to update, we need to go through some dates, okay? The first one, Jan 10th, Friday, we've got the USDA report. They're going to give us the final yield numbers, right? We're going to talk a lot about it in the next few days. The other one we have is tomorrow. We have the National Day of Mourning for the death of President Jimmy Carter. Markets close. Gray markets close at 12:05. Brady, is that right?
12:15, I believe.
12:15. Okay, thank you.
In that area.
Yeah, and
Depends. You're
so
always 5 minutes off. Illinois time's different from Kansas time, though. So maybe 12:05 for you.
That's so true. I never power down my computer, so the time gets like slowly off. So I'm about the market's open at 8:27 on my computer, in case
Yeah,
you wanted to know.
roundabout. Yeah, that's fine.
The other one, and the more I think about it, it might be just we're talking about Jan 10th, but I think it's just as important is we got to be ready for the inauguration of Donald Trump. That comes on Jan 20th, and he had a press conference yesterday, and I mean he was firing on all cylinders. Brady, we are you ready for the Gulf of America? Greenland could be a state. We're going to take back the Panama Canal. I mean, earlier in this week we talked about how there was rumors that he was going to lessen the tariffs, right? Tariffs on specific goods instead of blanket tariffs. That change, he put a stop to that immediately. And so I think if you're not ready for volatility just based on uh, potential changes, you're kidding yourself because we could see some fireworks if his press conference yesterday was any indicator.
That's the statement. That's the statement of the day right here is be prepared for everything's on the table going forward. The Gulf of America, I love that. In Dodge City, we're on the Arkansas River. It's called the Arkansas River here, Connor B. So I can relate. I love it. Let's rebrand. Never too late to rebrand. I like it.
Oh, good stuff. But I go back. Every year's different, and we're in a much different environment in terms of trade relations with China than the first time we put on tariffs. Right, we're in a different a world, different market, everything. But if you're not ready for the potential, the potential fallback of tariffs in the ag market, right? We're talking about, us as brokers, uh, the potential for this Jan 10th report, but we got to talk about, we got to be ready for any type of political headwinds as well. So, um, I
Be
think
ready
that's
to
a big
rock
one.
and roll. Yeah, be ready to rock and roll. These markets are going to be moving. And what surprises me a lot, Connor, and we've talked about it a lot, is that volatility is so low. And just what is price the market? to me, isn't fairly pricing in what could lie ahead going forward. We talked about that yesterday in the premium content. Might flash that graphic up real quick if you got it handy.
Yeah, just I think when you do what we do, you have to, we look at the historical volatility. We talk about it a lot, but you know, making guys aware of that, right? Are we ready for the what history has told us we could see for price volatility in the grain markets in 2025, right? That's what we tried to do. I thought it was a good premium.
Yeah, timely, applicable there. Volatility in 2025. You managing dimes or you managing dollars? That's the bottom line there going forward.
Yep, good stuff. Well, also we had a flash sale, 120,000 metric tons of soybeans sold to unknown destinations. Um, Good to see. We talked about export inspections. Was that yesterday? Am I losing track of days? That was yesterday.
Inspection
Um,
yesterday. Yep.
yeah. So good to see. Be nice to see. If we look at the historical, we fall off on soybean exports pretty dramatically, but it'd be nice to get that extra little. I don't know if I want to say blip, right? A nice extra push where we could get a little bit more out. So we'll take it.
Yep. We will. Absolutely.
So good stuff. Other one, Brady, Farm Doc. If you're not looking at their stuff, you're missing out. They put out a ton of good stuff, but they did a great breakdown on just the economic assistance that we can expect going forward. The one thing I think that they really outlined is that, when we signed in that legislation, right? Number one, we have a continuation of the Farm Bill into 2025. And so, part of that is why I just wonder how soon we're going to get new rhetoric on the Farm Bill. But so that was number one. Number two, we've got the 20 billion for disaster aid to farmers, and that it's think of drought, excessive moisture, any type of natural disasters. But we're not really sure what we don't have the framework for that one yet. But then the big one is going to be the 10 billion in economic assistance to farmers. We do have quite a framework for that. And then I'm going to pop this chart from Farm Doc. Looking on the right, if you go down per commodity, right, we can look at the different estimated payment rate, right? It's not necessarily set for your individual operation, right? It's kind of just blanket looking at the marketing year price, potential input costs. And then, of course, they have limits based on how much of your income comes from farming, right, and all that. But so it looks like we can expect, they're thinking around 42.50 on corn, 29.50 on beans in terms of economic assistance.
Good
So
stuff. Yeah.
it
Might
helps.
It does, yeah, and use it to pay bills, use it to, pay the bills that you need, pay down your operating note, hopefully get, money coming into the ag sector. That's a good thing. It helps guys out. But I would challenge guys, if you're wondering where to apply that money and you're looking for a place to put it that may benefit you down the road and help you going forward, look at risk management and applying those funds to protecting next year's prices so that you're in a good position to defend your bottom line. I don't know. Maybe it's a good idea.
I like it. I like it. Well, the other headline I think that it's really grabbing attention has got to be this dryness in Argentina, Brady. So continue, if we're looking at the GFS forecast, no mistake, it continues to look dry in those parts of Argentina. And then another good chart from Reuters from Karen Braun. It's just looking at what is potential soybean yields versus what precipitation for January. Right now, we are calling for a very dry January in Argentina, and so looking at the bottom of the chart, I think right now they're forecasting. It's not even on the chart. It's something like 30 over here, not even the 60 that we're calling it. So how much of a yield deviation can we see? And so the one takeaway, and Karen pointed this out, is all these times where we've seen a dry January, 04, 09, 18, 12, 13, right? How far have genetics came um, in 5-6 years that can we withstand a little bit of dryness better than previous years? Who knows? Time will tell, right? Those GFS forecasts have a way of changing pretty quickly as well. But that's the story right now, right? If you're going to be a soybean bull, I think that's what it comes down to, is that southern Brazil most of Argentina, right? How's that going to affect their soybean crop? And then also looking forward, looking at Argentina's corn crop as well.
Mhm. And to me, Connor, that's one domino, right? We need more than one domino to fall or to get real excited about the market. So what's that second domino that's going to add on to that? You look at South and then Brazil production. Will that more than offset the losses down there in Argentina? Some big questions there, but
Yeah.
uh,
Time
I don't
time
know.
will tell. Yeah, we've seen this before with soybeans, right? We see a little bit of dryness. Yeah, I think that's a good point. Is when we look at Brazil, we are still forecasting record soybean production, right? Most trade estimates think the USDA is maybe going to go north of a 170 million metric ton on Friday, and so it's not like we're hurting on soybean production in South America. It's just how much can we pull back based on this dryness, I think.
Yeah, well, it's like Kansas having a corn problem and Iowa not having a corn problem. It's Iowa's the big dog in the hunt, and Brazil's a very big dog in the hunt there. So
I go back to, and Luke, if you're watching, this is not a call out to North Carolina, but um, I had a customer tell me, the crop looked fantastic come June, July, and he was telling me, he's like, well, it's pretty dry in North Carolina, and I had to ask him, how much do you think overall production does North Carolina have a piece of? So let's keep that in mind, right? There's
super
always
low.
going to be a production issue somewhere, right? If you're looking for the bullish story, you're going to find
Mhm.
it.
Yep, definitely. All
So,
right. Well, I'm going to move on to this cattle deal. We had a big cattle headline here yesterday afternoon, got dropped and kind of stirred up the pot on social media and analysts pumping stuff out there. Looking at that headline, Mexican cattle feeders imports expected to resume here late January. January 20th was the week they threw out. It's not really unexpected, but it's a headline, it's news, it's noise. There was talk that they would resume prior to Christmas. So this has actually kind of been an extended period where they haven't been able to open. I think there'll be a quarantine period. They'll be watching those animals for 7 days. It's probably gonna be pretty slow traffic coming across there out of the gate. But I don't think there was any doubt that those cattle were going to end up here. Maybe there's fewer of them that actually are able to because of some opportunity loss on the whole deal. For that time, you just can't make up time. And if you're going to run cattle on wheat in December, maybe you're not going to buy as many in January as you would have in December when they're finally able to get some up here. But at the end of the day, the feeder cattle market handling this headline really well, mixed, kind of leaked weaker out of the gate, but didn't gap down here this morning. It just opened flat and then bled lower, actually went green for a period, and we're kind of mixed right now. And I think you got bigger things going on the macro side of things. I think we got a question over there on cattle. We
yeah.
might pull that up and talk about that here.
Yep.
Um,
Beginning to feel like cattle are topping. How much more can it run, or is the party about to be over?
it's a great question. It's $1 million question, Adam. I don't want to limit the upside of where this market can go. The cow herd, the beef cow herd, it's not getting any bigger yet. I think we're going to the January 30th inventory report. If we actually get that report, I think it's going to print another squeeze on the total beef cows here in the U.S. And we had the smallest number in 70 some years printed last year when we got the latest numbers. This year we'll continue that trend, I imagine. I don't think we're rebuilding that cow herd yet, but the things going forward to me are what that goes back to that January 20th inauguration trade stuff with Mexico, with Canada. Are we going to put any sort of beef import tariff limitation on what Brazil or Australia can send to us from a imported beef standpoint? And that could be a catalyst to skyrocket this thing to $83 plus. I wouldn't write those numbers off as potential to be seen. But on the flip side, you can't argue that it's 270 today, 265, 270 today on the board. Those are great prices. And with the fund link that we have, you could see a 40, 50, $60 sell off in a heartbeat on any other headline or economic problem that we had going forward. So impossible question to answer, Adam. But if you're long the cattle market, you've got animals out there, you need to button up coverage and tighten those things up.
I like it.
Sorry,
Good
my
stuff.
rant's over.
No, no, good stuff. Let's keep going through the question. Luke, annex and make states of Manitoba, Alberta, and Saskatchewan. Ontario and Quebec can do their own thing. Okay, we're gonna leave French Canada, and Ontario is like Toronto, right? That area. So basically,
I'm
we're taking.
Joe
We need
saying yes. He's
We're
saying yes.
okay, Joe. For anyone that doesn't know, Joe is our Canadian expert. Divert all questions about Canada to Joe Grisafi. Also, any furnace questions you have as well.
He's fresh up to date on his furnace stuff. We got to give him some crap about that. He said it got down to 50 some degrees in his house yesterday because he just spent a nice hefty bill on a new furnace system in his house. So good stuff. So
All right, Adam, I believe a significant percentage of Argentina farmers still use seeds from previous crops for planting, if I remember correctly. How many top genetics are getting planted is my point, right? So the question is how, back to that chart where we saw a significant yield drop in 18, and then what was it, like 04, right? Has Argentina made the genetic jumps, right? Are their genetics that good, right? Good point, Adam. Who knows? I think time will tell, right?
yeah, I would add too. A lot of time we give so much credit to the genetic side, and it should be some there. I mean, we're making genetic advancements. The technology that's there to improve seed lines is much better than it was 10, 20 years ago. They got some new. They're able to bring new lines to market faster than they were 10 years ago. But we're not giving enough credit to the farming practices and the farmer out there. I think no-till, the
Yep.
management of the soil, and all those other things. Those are pieces of the puzzle that are also helping to improve the resiliency during adverse conditions.
Yeah. Great point. Great point. Right. When we look at the trend line yield, I don't what is it 50-50 genetics and farming practices? Who knows? I bet if I asked 10 people, I'd get 10 different answers there.
Probably so. Yeah, yeah, you definitely would.
So,
Good stuff.
well,
All right.
yeah, good stuff. We'll go ahead and wrap it up, right? Markets very much not a whole lot of movement when I'm looking at my quote screen in grains. Um, I think we're really probably squaring up before we get some of that new data. Um, we talked a lot. We talked a lot about on premium is that there's only one way to get control of the 25 crop that we know of, right? And so um, think about being proactive. If we can help get a plan in place, right? The Jan 10th report is it's 50-50 if it's bullish or if it's bearish. The past, how far did that go back, Brady? 15 years, 10 years? I
Yeah.
can't remember.
Yeah.
Who knows what it's going to say, and but it's a great way to get a kickstart on 25 marketing, right? Get in control. So I think that's really been our focus on premium, just trying to educate guys, right? Show them different avenues they can go. And guess what? After the Jan 10th report, you know what date we're going to talk about? Probably Jan 20th, right? And how different policy, right? Depending on where this administration decides to go, making sure we're prepared for any scenario. So that's
Absolutely. I got two graphics that I loaded up that I want to tie
let's
into
do it.
this real quick.
Yeah.
While you're here, before we go, corn CVol, look at that. This is going back to 2019. Volatility is incredibly low, um, for the last 5 years, and we see these volatility upticks. So it ties into what we talked about on premium. With we're not sellers of low volatility. This is a time to manage, prepare for that increase in volatility. Look over at the bean side of things. Very similar situation. Maybe not as dynamic the last couple years, but definitely on the lower side on the volatility front on a B. But
Good stuff.
yep,
Good stuff. Well, thanks everyone for watching. We'll go ahead and get out of here, and we'll see everyone tomorrow.